If you happen to be born before 1961, the instant you turned 65, the law silently removed you from an entire category of expenses and taxes that you are, statistically speaking, still paying in their entirety. And not a single person whose job involves collecting that money will ever pick up the phone to tell you to stop. I want to state this clearly right from the beginning because it's the single most costly misunderstanding I encounter year after year. Turning 65 doesn't simply make you eligible for Medicare. It quietly repositions you in the eyes of the federal government, your state, your county, and several other agencies, all of which are legally obligated to treat you differently from this point forward. There are expenses that younger people still carry that you no longer need to. There are taxes that shrink, lock in place, or disappear completely the moment you cross that threshold. But here's the catch that drains people of real money year after year. Being legally entitled to an exemption and actually not paying it are two entirely separate things. The law doesn't refund you automatically. Nobody at the county office mails you a check. The agency that has been collecting from you for 40 years isn't going to send a birthday card reading, "Congratulations, you can stop now." You have to know the exemption is there and you have to apply for it yourself. That single gap between qualifying and claiming is precisely why most people who are fully entitled to these benefits never see a cent of them. And before you decide this video has nothing to do with you, let me clear up the biggest myth of all, because this is exactly how people convince themselves to walk away from money that already has their name on it. Some people assume a list like this only applies to lower income retirees who are struggling to make ends meet. So if you own a paid-off home and live comfortably, you tune out, believing none of it concerns you. Other people assume the complete opposite, that this is only relevant to the wealthy, those with large estates and high-end accountants. So if they're surviving mainly on a social security check, they tune out as well. Both groups are mistaken, and both are leaving money sitting uncollected. Some items on this list benefit the lower income retiree the most. Others are worth considerably more to the person sitting on a home that has doubled in value over the past few years. For every single item, I'll explain exactly who stands to gain the most. So nobody watching can honestly claim, well, that one doesn't apply to me. And if you're currently renting, don't click away either, because one item on this list quietly determines how quickly your rent is permitted to increase. So let me tell you briefly who I am and why I'm the one sharing this with you. My name is Weston. I'm a state bar licensed estate attorney, and for more than 15 years I've sat across the table from county assessors, probate clerks and government agencies on behalf of ordinary families. And I'll tell you the most painful pattern I've witnessed throughout all of that time. It isn't the people trying to cheat or manipulate the system. Those cases are uncommon. The painful ones involve the honest person in their 60s, 70s and 80s who has done everything right throughout their entire life and who is still paying bills they were legally exempt from years ago simply because nobody ever sat them down and told them which form to file. That's the most expensive kind of mistake there is because it's completely invisible. There's no overdue notice, no penalty, no alarm sounding anywhere. There's just money quietly leaving your account every month, every year. That never had to leave at all. So let's correct that right now. Today I'm walking you through 5 of these, one at a time, in plain everyday language, with the exact thing you need to ask for on each one. Then I'll give you a few bonus strategies at the end for the homeowner with some meaningful assets, because those final ones can be worth a small fortune, and almost nobody talks about them. Stay with me until the end because the 5th item on this list carries the highest value of all, and also happens to be one of the simplest to claim. If you only take action on one thing from this entire video, it will probably be that one. The brand new bonus deduction for anyone 65 and older. Let's begin with the most recent one, because it's so new that almost nobody has caught up to it yet. And that's precisely why it's being missed. Starting with the 2025 tax year, under tax legislation signed into law in July 2025, every American aged 65 or older qualifies for a new bonus deduction of $6,000. It is in effect for tax years 2025 through 2028. I want to be exact here because this is where people get confused. This is not a replacement for your standard deduction. It layers on top of it. It's an additional $6,000 taken directly off your taxable income simply for being 65. And if you're married and both you and your spouse are 65 or older, that's $6,000 each. $12,000 as a couple stacked on top of everything you already receive. Here's the part that catches people off guard. You receive it whether you take the standard deduction or you itemize. It doesn't matter which filing method you use, which sets it apart from the older, long-established extra standard deduction for seniors. More on that one in item 5, which only applies if you take the standard deduction. It does begin to phase out at higher income levels. As a single filer, it starts shrinking once your modified, adjusted gross income climbs past $75,000. For a married couple filing jointly, that threshold is $150,000. Above the higher cutoff points, it vanishes entirely. But consider who that still leaves in: the vast middle, the retiree living on a normal, modest income. For that person, this is real money removed directly from the amount the government is permitted to tax. Here's what genuinely troubles me about this one. The people it helps the most are the exact people least likely to notice it. The 65-plus filer with an ordinary income who prepares their own straightforward return or passes it to a preparer, moving quickly through a large pile of them. That's precisely the person who won't notice whether this new deduction was actually applied and who will quietly overpay without ever realizing it. So the action here is simple and takes about 2 minutes. When your return is finished, before you sign it, look it over and confirm the enhanced deduction for seniors was actually applied. If you're using tax software, make sure your date of birth is entered correctly, because that's what triggers it. This isn't a confrontation with anyone. It's a line on a form, and you simply have to make sure it's filled in. 2. Your property tax bill. This is where the biggest dollars on the entire list are hiding. Pay close attention because there are actually 3 separate filings stacked on top of one another here. And most homeowners don't have a single one of them properly filed. The first is the homestead exemption. It removes a portion of your home's assessed value from consideration before the county ever calculates what you owe. In Florida, that portion is $50,000. In Texas, it's $100,000 off the school tax portion of your bill. Every state handles it differently, but in nearly every state, it represents real savings. Here's where people get tripped up. Most homeowners assume the homestead exemption is automatic, that it simply kicks in the day you purchase the home. In most states, it isn't. You have to submit a 1-page form to the county, typically once before a spring deadline. File it once, and in many states, it remains in place for as long as you own the property. Miss it and you pay the full bill that year for absolutely no reason. The second filing sits right on top of the first. It's the senior or age 65 exemption. Most states that offer a homestead exemption also provide an additional one that activates the year you turn 65. And this is the one the county will almost never notify you about on its own. It's an entirely separate application, and you have to request it by name. In Texas, every homeowner 65 and older receives an additional $10,000 off the school tax portion on top of the homestead exemption. In Florida, the senior exemption can add another $50,000 on top of the basic $50,000, effectively doubling the write-off. And here's the point where comfortable retirees incorrectly stop paying attention. They hear the word senior and assume there must be an income test. They'll fail. But in more than half the states that offer this, there's no income test whatsoever. Texas, Florida, Georgia, Tennessee, Alabama, and others. You turn 65, you file, you receive it. Age is the only qualification. The third is the most valuable of all, the senior assessment freeze. Here's what it does. When you turn 65 and submit the freeze application, the county locks your home's taxable value at whatever it is the year you apply. From that point forward, it doesn't matter how much your neighborhood develops or how high property values climb on your street. Your tax bill is calculated on that frozen figure. In Texas, once you file for the over 65 tax ceiling, your school district tax is locked at the actual dollar amount you paid that year. Your home's value can double. The bill cannot increase. So who does all of this benefit the most? Honestly, everyone. The basic homestead exemption helps the lower income homeowner the most in percentage terms, but the freeze is worth a small fortune to the person sitting on a paid-off home that has tripled in value in recent years. Because they're the ones facing the largest potential increases. And renters, I told you this one belonged to you as well. Here's why. Your landlord pays that property tax bill and passes every dollar of the increase directly into your rent. When those bills are frozen or reduced across a community, rents stop rising the way they otherwise would. 3. Your Medicare Part B premium. This is the one quietly pulled from your Social Security check every single month before the money ever reaches your account. Which is exactly why so many people forget they're even paying it. For 2026, the standard Medicare Part B premium rose to approximately $229.00 a month, up from $185.00 in 2025. And that amount comes out automatically month after month. But here's what almost nobody is told. There's a set of programs called Medicare savings programs. And if your income falls below the limit, your state will cover that Part B premium for you, not reduce it, cover it outright. There are 3 tiers identified by the initials QMB, SLMB, and QI. The most generous QMB doesn't just cover your premium, it also eliminates most of your deductibles and copays on top of that. Here's what genuinely troubles me about this one, and it's why I'm spending additional time on it. The income limits are far higher than most people expect. A lot of folks glance at the word assistance, decide they must earn too much, and never check when they'd actually qualify. On top of that, a number of states no longer consider your assets at all. So your savings or your paid-off home won't disqualify you. And despite all of that, this remains one of the most underclaimed benefits in the entire system. Millions of people who currently qualify never apply purely because nobody ever informed them the program exists. Who does it help the most? Anyone living primarily on Social Security. This is enormous for you. The action here is one phone call. Contact your state health insurance assistance program, your local SHIP office. It's free, and they'll evaluate you for a Medicare savings program and help you apply. That one call can put close to $200 a month back into your check. Do the math over a full year. And while you have them on the line, ask about one more program in the same category, because it frequently travels right alongside it. It's called Extra Help, and some people know it by its alternate name, the low-income subsidy. This one targets a completely different expense, the cost of your prescription medications under Medicare Part D. If you qualify, and many of the same people who qualify for a Medicare savings program also qualify here, it can dramatically reduce what you pay for medications, your drug plan premium, and your deductible. And here's the reason I raise it immediately after the previous one. In many cases, being approved for a Medicare savings program automatically enrolls you in Extra Help. So that's 2 of the largest healthcare cost reductions in the entire system, both unlocked by one phone call and one application. For someone taking several prescriptions each month, that's not pocket change. That can represent one of the largest benefits on this entire list, and it's bundled right into the call I just encouraged you to make. 4. Phone, internet, and energy assistance. Item 4 is smaller in dollar terms, but it's still a bill you can legally stop carrying in full, so I'm not going to gloss over it. There's a federal program called Lifeline that removes about $9.25 a month from your phone or internet bill, and many states add their own discount right on top of that, which can push the savings even higher. Separately, if heating or cooling your home is ever a financial strain, there's a program called LIHIAP, the Low Income Home Energy Assistance Program, which helps cover that utility bill directly. I'll be straightforward with you, this isn't the most impressive one on the list. $9 a month isn't going to transform your finances, but here's the way I want you to think about it. It's one more recurring expense that the system already determined people in your situation shouldn't have to carry alone, and it sits there unclaimed for the same reason as all the others. You only receive it if you ask. When you stack several of these together, the smaller ones and the larger ones, that's when the monthly total really begins to shift. 5. The long-standing extra standard deduction for seniors, which brings me to number 5, the one I encouraged you to stay until the end for, because this is the item that quietly costs people the most money year after year, and it's also the single easiest one on the entire list to correct. Remember that brand new $6,000 bonus deduction from the beginning of this video. On top of that, the tax code provides every filer aged 65 and older a second entirely separate additional standard deduction, one that has existed in the law for years. For the 2026 tax year, that amounts to roughly $2,150 for single filers and approximately $1,650 per qualifying spouse for married couples. It stacks directly on top of the regular standard deduction that everyone receives. And now it also layers with the new bonus deduction. Put all 3 together, the regular standard deduction, the long-standing senior edition, and the new $6,000 bonus. and you'll find that a large number of people over 65 owe far less in federal taxes than they think they do. A meaningful number of them owe nothing whatsoever. But here's the quiet trap. Those same people continue over-withholding from their pension or social security out of habit, or they keep handing their taxes to someone who never stops to adjust for their age. Year after year, they hand the government an interest-free loan and consider it normal. In my experience, this is the most common and the most correctable financial mistake people over 65 make. What I believe most people fail to understand is that the tax code isn't trying to hide this from you out of any deliberate intent. It's simply that no part of the system is designed to walk over and notify you. The simplest move you can make is this. When your return is being prepared this year, confirm that both your regular standard deduction and your age 65 additional deduction were actually applied. Then ask whether your withholding should be adjusted going forward so you stop overpaying every single month. It's not a confrontation, it's a box that simply needs to be checked correctly. A few bonus moves for homeowners with real assets. If you do have meaningful assets, let me share a few bonus strategies that almost nobody ever hears about. Because for the right person, these are worth more than everything else on this list combined. The first is a property tax deferral. In a number of states, once you reach a certain age, you can choose to stop paying your property tax bill entirely, and the state simply settles the balance later when the home is eventually sold or transferred to your heirs. You preserve your cash flow in the meantime. The second is the surviving spouse carryover. When one spouse passes away, senior exemptions and freezes don't transfer automatically in many places, and families lose them entirely by accident. But if you file the correct paperwork, the surviving spouse can often keep the deceased spouse's exemption active, rather than watching the tax bill spike during the most difficult possible time. The third is one people dismiss until they actually run the numbers. In a number of states, once you reach a certain age, your vehicle registration or annual excise fees get reduced or waived entirely. It's modest savings each year, but it's your money, and it's there for the taking. Margaret's story. Let me bring all of this back to a real person. I once worked with a woman I'll call Margaret, 72 years old, living near Toledo, a widow in a paid-off home that had quietly doubled in value over the years, getting by primarily on her social security and a small pension. When we sat down and reviewed her situation, here's what we discovered. She was paying the full Medicare Part B premium every month. She was paying the full unfrozen property tax bill on a home that had appreciated for years. And she was paying more in federal taxes than she actually owed because her preparer had never applied her senior deductions or corrected her withholding. All three simultaneously. And every single one of them was something she had the legal right to stop. So we filed 3 forms. A Medicare Savings Program application, the senior exemption and freeze with her county, and a corrected tax return. Nothing about Margaret's life changed. She didn't relocate. She didn't sell anything. The only thing that changed was how much of her own money remained in her account at the end of every month. And here's the part I want you to genuinely absorb. She wasn't manipulating the system. She wasn't getting away with anything. She was simply finally claiming what she had already earned over a lifetime of doing everything right. That's the entire message of what I'm sharing with you today. Being legally exempt and actually keeping the money are 2 entirely different things. The only bridge between them is the form. And the agencies are not going to build that bridge for you. What to do this week? Here's exactly what I want you to do this week, and none of it will cost you a single dollar. First, call your county assessor's office and ask specifically whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property. If any of them aren't, ask which form adds them and what the deadline is. Next, call your local SHIP office and ask them to screen you for a Medicare savings program. And finally, the next time your tax return is being prepared, confirm that your senior deductions were applied and ask whether your withholding should be adjusted. And if the cost of hiring someone is part of why you've been putting this off, listen carefully because you don't have to pay anyone. There are 2 free programs staffed by IRS certified volunteers. One is called Tax Counselling for the Elderly, and the other is AARP Tax Aid. They'll sit down with you and prepare your return at no charge, and they know exactly which senior deductions to look for. So for most of you, the cost of finally capturing every one of these benefits is nothing at all. That's it. A few phone calls and a couple of forms standing between you and money that has been yours all along. If this one caught you off guard, there's another video right here on the channel where I walk through those property tax forms in much greater detail, state by state. It's the same type of money hiding in the same kind of silence, and the card for it is on screen right now. One final brief note, and it matters. This is general educational content, not personal legal or tax advice. These rules genuinely do vary by state and by income level. So always confirm your own situation with your county, your state SHIP office, or a qualified professional before you take action. And if anything here was helpful to you, do one thing for me in return. Share this with one person you know who is over 65. It won't cost you anything, and it just might put a few $100s a month back in their pocket. I'll see you in the next one.